All right, Biden left us with a much worse economy than many people realize. Let's talk about that in front of the Fed meeting. Art Laffer, a former Reagan economist. Steve Moore, Heritage Foundation Senior Fellow and host of More Money on WABC Radio. Gentlemen, thanks. Just a couple little things here and there. Art Laffer, does it trouble you at all? This chap, Steve Myron, who is the chairman of the Council of Economic Advisors, is going to go to the Fed. Now, he'll be confirmed perhaps today. I think they want to have a cloture vote to shut off the filibuster and confirm him. Okay, tonight. Is it odd? Does it strike you as odd that, you know, what the Wall Street Journal editorial said today, he could have resigned from the CEA completely, and if Trump wanted to hire him back, but taking a leave of absence, he's still sort of part of the Trump administration and going to the Fed. Does that trouble you at all?
Not at all. Not at all. What I think happened is he wanted to make sure he was confirmed before he left the chairmanship. The vice chairman of the Fed is really a great, great guy, Pierre Yared. He's just phenomenal, from Cleveland, Ohio. I thought I'd mention him, went to my prep school. They're both really good chairman and vice chairman, and I think he just wanted to make sure he had that, and I don't think there's anything inappropriate or bad or any way, shape, or form about that. He's appointed by Trump. Everyone knows that Trump likes him, and he's a really clear-thinking, smart guy, well-educated, and quite humble in his own right.
All right, so I'm just asking, you know, it's got to come up. Now, Steve Moore, I've got one for you, Steve Moore. I know everyone's saying tariffs don't cause inflation, or tariffs might cause one-time price increases, all right? And I'm playing devil's advocate here. I happen to support Mr. Trump's policy, and I happen to believe the Fed is going to knock their target rate down by a quarter tomorrow. I don't know, maybe a half. But, the 3-month change in the CPI, you know where I'm coming from, 3-month change, 3.5%. Look under the hood, ex-food and energy, 3.6. Their target is 2. And then if you go to goods inflation, which might be more impacted by tariffs, it's actually 3.0 for the goods inflation and 2.8% excluding food and energy. Now, all that is above the Fed's target, and all that is creeping up. The argument is it's a one-time issue. Do you think it's a one-time issue, Steve Moore?
Well, look, I do think tariffs have contributed a little bit to the inflation situation. I know you and Arthur are more experts on this than I am, but you know, if you have an increase in the cost of bringing something into the United States, some of those costs are going to be passed on to consumers. What really annoys me about what the Fed has been doing and what the chairman, Jerome Powell, is saying is he's only looking at the tariffs, Larry. What about the tax cuts? Those lower costs. What about deregulation? Those lower costs. What about the fact that we are producing more energy than ever before, and we have gas prices down below $3 a gallon in many states right now? Those are all deflators. I mean, we learned this under Reagan, right, Arthur? When we cut taxes, deregulated the economy, got spending under control, inflation came down. And Larry, I think that's the playbook that Donald Trump is playing out of.
Well, I agree with the playbook, and I agree with the futuristic. I'm just saying, here's what we know factually, and I don't think enough attention has been paid to it. That's all I'm saying. You should ask, I mean, Art Laffer, we don't have time for a monetary seminar, but sometimes one-time price hikes can be turned into general inflation if you accommodate them with more monetary base or lower interest rates. I'm just raising that to be provocative, Arthur.
Yeah, well, you know, if you look at those numbers, if you plot the numbers, and I don't have the plot in front of me, Larry, yes, it is a slight rise in the last 3 months. There is a slight thing there, but it is slight. And we'll just have to wait and see. There has been no definitive information released that would do that. And to Steve's point, if I may, yes, it's true, Steve, that import prices do go up. But remember, export prices go down because people export goods to buy goods from foreigners. So if you know Lerner's symmetry theorem, the decline in prices of export substitutes matches almost exactly the price increase of imports. So I don't think trade has done any of that in this process whatsoever. I don't know what has, but it's not been huge.
I get it.
And I think we're jumping ahead of ourselves.
I get it. I'm just raising it. I'm not opposed to the policy. I'm just raising these issues. Steve Moore, the other side of the coin is Biden's given Trump a worse economy because at least 1.5 million payrolls have evaporated. It could be more than that. And we're seeing private payrolls haven't risen in 4 or 5 months. Stall speed is what Chris Waller calls them. The unemployment claims. I mean, I think that's an issue. I think you've got a potential business boom from Trump's tax cuts and deregulation. But right here and now, Steve, I mean, I think the economy inherited from Biden is a lot worse.
Yeah, look, there's a mythology out there that Biden handed off a good economy to Trump.
Right.
And in preparation for this segment, I looked up the numbers because, you know, the Census Bureau just put out the numbers, the official numbers on what happened to incomes. And it's an amazing story, Larry. Over the 4 years that Biden was president, yes, the rich got richer, and I'm all in favor of people getting richer. The middle class made no gains at all when you adjust for inflation, none virtually whatsoever. And you know what? The poor got poorer, which is exactly the opposite of what Biden was trying to do with all his income redistribution policies. Meanwhile, if you go back to Trump's first term in office, guess what? Everybody got richer. Everybody's boat rose. So there's a real difference in philosophy there. By the way, black incomes fell under Joe Biden. These policies that he put in place, nothing can substitute for prosperity.
Yes. No, I just think there's a lot more repair work, Arthur, that has to be done.
I agree.
I think that's what the issue is. The economies don't turn and snap immediately on a certain day. There's a lot more. The policies should do the trick, but it doesn't happen overnight, Art.
No, it doesn't. And Larry, you've got to remember that the immigration numbers have dropped dramatically. I mean, what were they running at 3 million, 4 million a year? They're now at 0. Maybe they're even negative 1 million on an annual basis, which will affect the employment numbers. That will affect the employment numbers if you have a lot less people. Now, I don't know how it goes in the establishment of the household survey, but when you look at that, that's true too. And also, Larry, what you have to do is when you look at these inflation numbers, you're looking at 12-month changes. It's equally as important what the number is that was dropped off 12 months ago as it is the number that's added in this month. So when I look at all these numbers combined, I'm not worried. I look at the stock market much, much more than I do these numbers as to whether the economy is doing well. And that stock market looks pretty darn good to me. I'm pleased with the way Trump's doing it. And lastly, we didn't really get such big tax cuts. We did get some tax cuts. We got a continuation of good tax policy.
I've got a plan.
We avoided a big tax increase.
I've got
so
a
that's
plan.
Really what we did. That's really important. So don't think of it as a boost. Think of it as stopping a fall.
Another segment. But let's take all those tariff revenues and turn them back to the taxpayers.
Boom.
How about those apples?
Yay!
All right, I
love it.
Art Laffer, thank you very much. Steve Moore, we'll do TikTok later, maybe when we figure out what the TikTok deal actually is.